Welcome to online lectures by CA Studies. For more lectures online, please do visit castudies.lk.
Hi everyone, welcome back. Hope all of you understood what we have studied yet. So we are in first chapter of financial accounting. We are still in the first chapter, that is financial accounting. This subject is BL1, financial accounting. This is, I'm always saying, because this is a video class. Many students sometimes will not understand what is going on, right? If you not understand what is going on, please watch previous video. In order, the videos are uploaded to our website. Okay, let's start from point where we have stopped last time, right? We are in first chapter, that is accounting and business environment. In this chapter, there are three contents. First content is the need for financial accounting. Second content is nature of business organization. Third one, governance. So we have seen what is the need for financial accounting. What is meant by the business organization? Who are preparing the financial statements? Why we need to prepare the financial statements? That is, I have explained, right? Then second one is nature of business organization. Based on the profit or based on the ownership, we have divided the organization into four. Based on the profit, there are two types: profit organization or non-for-profit organization. Based on the ownership, private sector organization or government sector organization. Then addition to these parts, right, that means types of the organization, our study pack contains extra notes. That is, study pack talks about additional information about sole proprietorship, sole proprietors, then partnership, third one, limited liability companies. Right. First of all, we have to see what is meant by the sole proprietorship. If a person, right, doing a business, this business may be, say, grocery. ඔයාගේ ගෙවල් පැත්ත තියෙන සිල්ලර කඩයක්, right? That is also business. That is owned by sole proprietor, one person own, right? If the business is run in the same name of the owner, no need to register. If it is run in a different name, it should be registered. For example, say this person name is D Silva. So this business name also D Silva Grocery. So this should not be registered. If you want to register, you can register, but that is not mandatory to register the sole proprietorship which is run under the owner's name, right? So this is called sole proprietor, sole proprietorship, right? This person called sole proprietor. He may be told sole trader, sole proprietor, right? Always sole trader and sole proprietor should be human beings. Very important. Sole proprietor or sole trader cannot be the organization, should be lived human being, right? This is called sole proprietor. Say this business, right, I take separately, this business is run by and owned by two persons. Another person come and join with him and doing the business. So say first person name is D Silva, second person name is say Chamara. If two person or more than one person means two or any number of persons join and together doing the business, that is called partnership. So this person called partners. Partners also should be human beings, right? Very important. Right? Here also same registration rule is applied. If this partnership run under the both partners name, for example say this partnership run under the Chamara D Silva grocery, then no need to register. If use is different name, for example Fast and Cool Play grocery, or Fast and Fast grocery, or 5-star grocery, or 4-star grocery, or Lucky Star grocery, any name can be chosen. If that name is different to partner's name, that should be registered, right? That's only enough, because financial accounting subject is little bit related to BL3, business law. In business law you will be studying what is the process of this registration and what are the types of the organization available, and also business environment and economic subject also you learning same thing, right? In first chapter I believe you understanding what is the different types of organization and what are the advantages, what are the categories of the organization, everything you will be learned here. Here financial accounting, this just to give an idea, right? Say any organization, right? Any organization that also can be business registered under number 7 of 2007 Companies Act, which is called company, right? Very easiest definition for company, right? Definition for sole proprietorship is business owned by one person, that is sole proprietorship. Business owned by more than one person, that is partnership. Any business registered under the Companies Act, that is company. So these three are only explained in your study pack. We should go with the study pack in order to pass the exam quickly, right? So businesses which is called companies, registered as a company, owned by any number of shareholders, any number of shareholders, any number of owners. See, I come with same points, right? So these owners are called shareholders. Right? In here I will explain how these shares are going. In here, Chamar D. Silva say investing 100,000 to this business. So capital is capital is 100,000. In here, say D. Silva investing 100,000. This is D. Silva. This is Chamar. Chamar investing 100,000. So this is the capital. In companies also same thing, but companies issue shares. Say D. Silva going to invest 100,000. Then Chamar also going to invest 100,000. Then say this is 1,000 shares into 100 rupees. So D. Silva owns 1,000 shares. One share's capital value is 100 rupees. So 1,000 shares, how much? 100,000. Chamara also 1,000 shares, 100 rupees. So 100,000. So number of shares in this company is 2,000. So number of shares owned by owners. So what is the ownership percentage here? Here ownership percentage is 50%. 2,000. Total number of shares is 2,000. Is ownership is 1,000 shares into 100, so 50. Chamara also same, 50 ownership. In partnership also 50 ownership. In sole trader, sole proprietorship, 100% ownership. For example, say in future, if Chamara wants to sell 500 shares to his wife, right? So he will be owning 500 shares in future. His wife owning 500 shares. So 500, 25% and 25%. So D. Silva owning 1,000, that is 50%. Chamara owning 500, so that is 50%, 25%. His wife 500, so that is 25%. So this is how company shares are. Company's capital is contributed, right, through the shareholders. Shareholder should buy the company's shares, right? We will be learning how to issue the shares and how to calculate the capital, everything when we prepare in the financial statements, right? I believe you understood this, right? I am going to raise this and I want to explain the sole proprietorship, partnership and companies limited liability company separately. I am reading for you. Sole proprietor. This is the oldest and most straightforward structure for a business. Sole proprietors, also called sole traders, are people who work for themselves. Of course, it doesn't necessarily mean that the business is only one worker. The sole proprietor can employ others to do any or all of the work in business. A sole proprietor owns and runs a business, contributes the capital to start the enterprise, runs it with or without employees. He can recruit the employees or he can work alone. Right? But ownership is one person. Employees are provided the salary. Owner provided what? Owner is provided with the profit or loss. Every month then the owner will prepare the financial statement and understand whether we making a profit or not, whether I can take the profit. If profit taken, that is called drawings. Right? That is not a salary. Right? And earns the profit or incurs the loss of venture. Typical sole trading organization includes small local shops, hairdressers, plumbers, IT repair services. Sole proprietors tend to operate in industries where the barriers to entry are low and where limited capital is required on startup. In law, a sole proprietor is not legally separated from the business they operate. The owner is legally responsible for the business. That is called, if company is debt there, in a business debts there, if that cannot be paid by the business owners, that is sole traders, cash or assets can be taken by the creditors. Right? When business runs, business can purchase the goods or purchase the assets or take a loan, right, from outside party. So that is liability. That liability should be paid by the business. If business does not have the cash, owner's assets can be seized. That is not safe for the business owners, right? But when come to company, that is limited liability company. That's why company is like a safe form of the business. Businessmen are closed by the veil and they are safe. Whatever the investment they made to the company only taken by the creditors. But sole traders or partnership, both are same. That means owners, if business cannot pay the debts, owners money can taken, owners asset can taken. That's why many businesses are, when growing, right, when started as a sole proprietorship or partnership, then it's going to start to grow, they quickly register as a company, then their assets and cash are safe. That is the disadvantage for sole proprietorship and partnership, advantages for the companies. If you take the notes, because your question paper is the MCQ paper. The business level 1 students are expected to remember the theories. So when I am lecture, it is easy you to remember, keep the theories in your mind. So take the notes, take 3 papers: company, sole traders and the partnership. When I talk about the company's advantage, under the company's paper, divide the topics: advantages of the companies and disadvantages of the company. When I talk about the advantages of the companies, take down a notes. When I talk common about the company, take a top of the paper. When I talk about the disadvantages, take a notes in disadvantages topic. That's how you have to build a notes. That is then your notes. That notes definitely equal to the study pack notes, because I am delivering the study pack to you. Okay. The next para says, a sole proprietor must maintain financial records and produce financial accounts. However, there is no legal requirement to make these accounts publicly available. Accounts එකක් prepare කරාම හරිද? ඒක කාටවත් පෙන්වන්න අවශ්‍ය නැහැ. ඒක තමයි ඒක කියන්නේ. No need to show anyone, right? If tax department requires, we can show, but publicly cannot be available. Publicly should not be available because we don't need to publish to everyone. We can keep with us, right? But in companies are divided into two types. Under the two types, there are 5 types of companies. In that 5 types, there are listed companies there. In listed companies, financial accounts are shared in the Colombo Stock Exchange. Anyone can go and download. If you want to download one financial statement of a biggest company, right? So listed company's name is N with a PLC. Say this is John Keel's PLC. John Keel's PLC. Go to www.csc.lk. Then go to listed entities tab. Under the listed entities tab, go to the financial. Under the financial, go to the annual report. In annual report, you can see all the annual reports prepared by the John Keel's PLC for past years, right? Past years and current years. You can download one and look at. But private limited companies annual reports are not available in CSE because it's a rule by the Security Exchange Commission to publish all the listed entities account in this website, right? There's a public interest. Public can see what is actually happened in this company before investing in this. Public are allowed to invest these PLC companies. PLC companies are issue the share to the public, right? You can also, if you want to buy the shares, you can also go to the World Trade Center 6th floor, showing your NIC card, and you can register as the investor. Then you can buy the shares of the PLC companies, that is listed entities. Then you can also earn the profit, annual profit, right? This is the public interest entity. That's why publicly it should be available, right? So I would like to explain further, that is a sole proprietor must maintain financial records and financial account. However, there is no legal requirement to make the accounts publicly available. They are usually only used to calculate the tax due to the tax authorities on the profits of the business. Banks and the financial may request to see the financial accounts of the business when considering application for the loans or overdraft. Sole proprietorship, right? Here we are not learning about the sole proprietorship's definitions, that stuff. We want to know financial statements, that is accounting. Why we need this? Because sole proprietorship are not mandatory to publish the public accounts to the public, right? But tax authority, it's a business, right? So tax authority wants to collect the tax. That's why tax authority requests the accounts, financial accounts. Second one, banks and finance companies. Banks and finance companies, sometimes sole proprietorship, if money is short, they can take a loan from this person. So this person means banks and financial companies, finance companies. So finance companies and banks are wants to recover their interest portion and the capital portion. So installment of capital and interest. So tax collected by the tax authority, installment of the capital and interest of the loan collected by the banks and finance companies. So they also want to check their accounts. So for this two purpose, tax and loan purpose only, sole proprietorships are preparing the financial statements. I believe all of you understood. Okay, let's move on to partnership.
Thank you for watching the video. Stay tuned with castudies.lk for more lectures online.